Welcome back to Yahoo Finance Live, everyone. It's time for our triple play, where we pick 3 tickers that we're keeping an eye on today. Now, for my pick, my ticker symbol is NKLA. That's the electric big rig maker Nikola, which focuses on zero-emission battery electric and hydrogen electric vehicles. Now, the stock was getting a boost as it announced it started manufacturing its Tre battery electric truck March 21st. Now, the stock jumped 15% in early trading. Now we see it's up just about 4%. So we did see that it did cool off later on in the day. Now, the stock was also helped by positive takeaways from JP Morgan on Nikola's analyst event that took place late Wednesday. And they're saying that consumer interest appears high and that the hydrogen ecosystem is signaling an emerging market opportunity. Now, Nikola did reiterate, though, that gross margins this year are expected to be between -60% and -70% before heading into positive territory in 2023. So the stock does seem to be trading on that potential for that multi-year strategy to pay off, and that the supply chain which plagued it and stalled the initial launch of its battery electric truck will be addressed.
Absolutely, Rachelle. If you're an investor in Nikola, really betting on the future of this company, because forget about profits. This is a company that has yet to deliver meaningful revenue as it starts to ramp up its vehicle production. Though it did say back in February that it expected to start generating sales from deliveries this fiscal year. Officially kicking off production for the Nikola Tre is definitely a big step towards that. Nikola has previously targeted delivering between 300 to 500 of these trucks to customers this year. So that is going to be the goalpost for investors to be keeping an eye on. And those shares, even with the pop today, still down by over 30% over the past 52 weeks. But switching gears here, I'm keeping an eye on shares of Spotify, ticker symbol SPOT. Now, these were higher in the pre-market session, now trading off their overnight highs, but still slightly in the green. And that's after Google announced that it was rolling out a new system, starting with Spotify, allowing the company to offer direct billing through the Spotify app instead of having to have users go through the Google Play Store. Now, importantly, this would mean for Spotify that it wouldn't have to bill users through Google systems, and it would thereby avoid paying commissions to Google of up to 30%. So this is likely going to be a positive for margins for Spotify going forward. Analysts over at Deutsche Bank also said that this new agreement will likely help reduce friction for new Spotify users and potentially drive even more new user subscriptions. Now, this update would be most relevant for Android users since they're using Google Play to download apps like Spotify, but it certainly does raise the pressure now for Apple to roll out a similar move with the App Store. Apple has also come under fire for the charges that it's rolled out to app developers when users make payments through the App Store. So we'll see if Apple does follow suit here, and also whether Google potentially expands this arrangement to other apps outside of Spotify as well.
Well, you mentioned Apple quite a few times there, and Apple is indeed my play. AAPL, as Jared mentioned a bit off the top of the show, according to Bloomberg, considering a subscription service for its hardware, which would essentially make your favorite device like paying a monthly app fee, which for many of us is the way we already use our iPhones because, of course, we have an upgrade. We're paying a monthly charge instead of that huge fee up top. So it may not change all that much for the average user. Also news today that Arizona is the first state that will allow its residents to put their driver's license in their Apple Wallet and even check in at TSA through the airport without a driver's license, just your iPhone. We get so much closer to being done entirely with the wallet. As for the stock, way up from where it started a year ago at $1.20 a share. Below its 52-week high, which was $182.94, up $277 on today's news, $172.98. Are you ready to be done with the driver's license and put it in your iPhone?
I don't know about that, Dave, but going back to the topic, of course, of Apple's hardware payments plan reported by Bloomberg, that's really the story that you mentioned that I think is going to be really interesting, and interesting for a lot of iPhone, MacBook, iPad users to see if this payments plan actually does get rolled out by the company. The big question is this going to make things less or more expensive for the average user? And is it potentially going to incentivize users to upgrade more often and thereby spend more than they otherwise would if they waited a couple of years to upgrade their Apple devices, as I certainly do. I know some users are definitely diehards when it comes to Apple products and upgrading every year, but certainly something for everyone. And perhaps this new hardware subscription plan, if it gets rolled out, will see that traction.